Hi friends, my name is krishnaakumalla. Welcome back to my YouTube channel. In our previous video, we discussed about uh, historical cost methods. One of the historical cost methods, I can say. And the second method we are going to discuss today. That second method is nothing but the FIFO method. Okay, what is FIFO? How the valuation can be done in FIFO method, and we will also try to work on one illustration. Right? Without wasting much time, let us get into the presentation. Okay guys, we are going to discuss about FIFO method. What is FIFO? What is FIFO? This F stands for first, I stands for in, this F stands for again first, this is WOS, this WOS stands for out. So FIFO means first in, first out. As the name specifies, it is very easy to understand how the inventory can be valued in first out method. Whatever first you material purchased that will come inside the business, that has to be consumed first. Next, one more material came in, that material has to be consumed first. So the flow should be whatever material you should receive first, that should be consumed. So that is what first in first out method says. Let me explain with an example. Okay, in this example, let us say I purchased different lots in different dates. 1st January, I purchased 1000 units. 10th January, I purchased 500 units. 15th January, I purchased 300 units. 20th January, I purchased 200 units. 30th January, I purchased 100 units. Now, let us say I consumed 1,800 units. I consumed 1,800 units. How the flow is going to be for 1,800? First, this 1,000 should have been consumed because we are following first in first out method. When we are following first in first out method, what is the first lot we purchased? When did we purchase the first lot? We purchased our first lot on 1st January. So that has to be consumed first. And then 10th January we purchased 500. That has to be consumed next. Right? Next 15th January we purchased 300. That 300 has to be purchased next. So if I say 1,800 worth of goods consumed in the month of January, I need to take these three into account. 1,000 plus 500 plus 300, put together 1,800 would have been consumed. Now I am left with what is 200 and 100. So this will be there in my closing stock. This will be there in my closing stock. When by end of 31st January, this will be my closing stock. 200 and 100, which is purchased on 20th January and 30th January. Simple. So whatever first I purchased 1,000, I issued to the production. Then I purchased 500. Then I issued that 500. Next, and 300 whatever I purchased, that I have issued to the production. And by the time I got into the month end, but then month end, when I look at my inventory, I could see 1,500, 300 already issued to the production, and the stock whatever left in the production is 200 and 100. That is my closing inventory. That is my closing inventory. Simple. Now let us read what the paragraph says. My network is very slow. Okay. Oh my God, it's taking its own time. Now, let me read. This method is based on the assumption that cost should be charged to revenue. Cost should be charged to revenue in the order in which they are incurred. That is, it is assumed that the issue of goods is usually from the earliest lot on hand. So, if I get the revenue, I have to proportionately, or whatever extent revenue I generated, to the extent of that revenue generated, whatever cost incurred has to be debited in P&L account, right? How do I arrive at that cost? That cost I can arrive. Whatever material I purchased earliest, not issued, purchased earliest, that has to be taken into account for calculating cost. And not only that, that has to be issued to the production department first. So it assumed that the issue of goods is usually from the earliest lot on the hand. Whatever stock you have on hand, when you are issuing that stock to the production department, you should make sure that the earliest one has been issued to the production department. That means earliest one in the sense, the first lot, whatever lot you purchased first, that has to be issued to the production first. Then next lot, then next lot. That is how the process has to be followed. The inventory of goods on hand therefore consists of latest consignments. Once you start issuing the earliest ones, by end of the month, what lots will be left in the inventory? Latest lots purchased will be there in the inventory. Latest lots purchased will be there in the inventory. Thus, the closing inventory is valued at the price paid for such consignments. Whatever latest consignments or latest lots available in the inventory, that will be considered as your closing stock. That means latest price is being considered for the purpose of valuation. That means that is the price where you purchased recently, right? That material will be part of your inventory. That is the reason, we always follow FIFO method, because earliest one will be issued to the production and the latest one will be considered for the purpose of inventory valuation. Are you clear? The FIFO formula assumes that the items of inventories which were purchased or produced first or consumed or sold first, and consequently items remaining in the inventory at the end of the period are those most recently purchased or produced. This is what even I explained now. So this assumption is in line with the good business practice to disposing goods in the order of their acquisition, especially in the case of perishable goods and items with frequent technological changes. It must be kept in mind that this assumption of cost of flow of goods or goods flow need not be true as physical fact. That is not necessary. Goods are physically also sold or issued in the chronological order of their purchase or production. It relates only to the method of accounting and not to the actual physical movement of goods. Very important point. See, when it comes to production, see, strictly speaking, you have to issue the material of earliest one to the production department. Whether you issue earliest one or latest one to the production, that is not a material for me. What I am going to, for valuation purpose, I will take only latest purchase. That is what it says. Let me repeat again. For issuing the production or for selling the products to the customers, what I am supposed to do is I can issue latest one to the production or earliest one to the production. I don't care. What I'm going to care here is I'm going to care about the valuation. For valuation purpose, I should always take earliest one, or I always need to assume that the earliest one has been issued to the production and that has been consumed, and the latest one is there in the production. So here it says it relates only to the method of accounting and not to the actual physical movement of the goods. You can do physical movement of the goods the way you want, but valuation, when it comes to valuation, you should always take latest stock purchased been part of your closing inventory. That is what the FIFO method says. I hope you understand the latest point. This is very important. Physical movement of the stocks goods can be different. You can issue the latest one to the production or the earliest one to the production. But when it comes to valuation, you should make sure that your physical movement is not being considered. Your actual purchase, earliest purchase will be considered as issued to the production, and the latest material purchased will be considered for the purpose of inventory valuation, closing inventory valuation. So please make sure that these steps are being followed. Once again, let me conclude this first in first out method. The first in first out method says the first material purchase will be issued to the production, will be issued to the production. Latest purchase will be considered for inventory purpose. Simple. There is no much complication in this. Okay, let us move on to the illustration now. Illustration says a manufacturer has the following record of purchase of condenser which he uses while manufacturing radio sets. December 4th, he purchased 900 quantity at 50 rupees. December 10th, he purchased 400 quantity at 55 rupees. December 11th, he purchased 300 quantity at 55 rupees. December 19th, he purchased 200 quantity at 60 rupees. December 28th, he purchased 800 at 47 rupees. Overall quantity he purchased 2600. Now what he says in the problem, 1600 units were issued during the month of December till 18th December. Till 18th December. So they issued 1600. So what is left now? How do we calculate what is left? So he has given issued. So when the issue quantity has been given, we need to calculate the first purchase into account for issue. Second purchase to be considered for next issue. Third purchase has to be considered first for next issue. So in this case, 900 will be the first purchase. So 900 I am considering as first issued. Clear? Then 400. So 900 plus 400. So 1300. So these are the first two lots have been issued to the production. Then 1600, right? 1600 in which 1300 is already issued. Another 300 is here. This 300 is issued plus 300 plus 300. So that means what? First three lots of 900 plus 400 plus 300 has been issued. Then what is left now? The left is last two lots of December 19th 200, December 28th 800. These two are left in the stock. 200 plus 800 are left in the inventory. So then we need to calculate what should be my closing inventory. So at what rate you purchased 800? 800 you purchased at, see here in solution, 800 stock you purchased at 47. That means the cost is 37,600 of that 800 units. Similar way, this 200 is purchased at 60 rupees. Then the cost is going to be 12,000. 200 into 60, 12,000. Put together how much? It is coming to 49,600. So 49,600 will be considered as your closing stock value. Very simple. So let me conclude this problem as well. He said 1600 quantity has been issued. 1600 quantity, how do I take? Which lot has been issued to the production first? First earliest purchase. Earliest purchase is 900. So I have taken 900 into account, that thinking that 900 has been issued. The next earliest 400. 400 has been taken into account for consumption. The third earliest 300. With that, the 1600 units issue is closed. Then what is left? 200 and 800. These two lots are not issued to the production. That means what? 200 and 800 are there in the production. Then what is the cost of those materials? 800 quantity we purchased at the rate of 47. 200 quantity we purchased at the rate of 60. Then we multiplied. We got to know 37,600 and 12,000, and the overall cost is 49,600. Very simple. That's all. This is how the FIFO method has to be followed in terms of calculating the inventory. I hope you are clear with the point, and if you have any doubts, please feel free to comment on my video. I will definitely come back to you on this. Thank you so much.